Economics, Standard 12, Unit 9, Fiscal Economics continued. Let us learn today differences between direct tax and indirect tax. We have learnt what is direct tax and merits and demerits of direct tax, and indirect tax and merits and demerits of indirect taxes also in the previous class. So let us learn today differences between direct tax and indirect tax and GST. According to the meaning of direct tax and indirect tax, direct tax is the tax levied on persons' income and wealth and is paid directly to the government, whereas indirect tax is the tax levied on a person who consumes the goods and services and is paid indirectly to the government. So according to the meaning of direct tax and indirect tax, direct tax is levied on income and wealth, whereas indirect tax is levied on goods and services. Goods and services. So goods and services. Of course, direct tax is paid directly to the government. Indirect tax is paid indirectly to the government. Directly paid to the government. Indirectly paid and according to the nature of direct taxes, direct tax is progressive in nature. Tax is levied on the person according to the paying capacity of the person and according to the income of the person. But whereas indirect tax is regressive in nature, both rich and the poor have to pay indirect taxes to the government irrespective of their income. So, direct tax is progressive in nature, whereas indirect tax is regressive in nature. So, nature, progressive, and your indirect tax is regressive in nature. Tax evasion is possible in direct tax. Tax evasion is hardly possible in indirect tax because it is included in the price of the goods and services. So automatically, tax evasion is hardly possible in indirect tax. So evasion. Possible, hardly possible. According to the inflation control, direct tax controls inflation, whereas indirect tax pushes up price inflation. So, inflation control, direct controls inflation, whereas indirect tax pushes up price inflation. Direct tax is imposed and collected from assessees, individuals, family members, company, firms, and so on. Whereas indirect taxes are imposed on and collected from consumers of goods and services, but paid and deposited by the assessee. Directs cannot be shifted, whereas indirect tax can be easily shifted. So direct tax cannot be shifted. Cannot be shifted. But whereas indirect tax can be shifted. So direct tax cannot be shifted. But whereas indirect tax can be easily shifted. Examples of direct taxes are income tax, wealth tax, corporate tax, gift tax, and so on. And examples of indirect taxes are, excise duties, customs duties, and sales tax, and so on. So we find a good comparison of direct taxes and indirect taxes. GST, Goods and Service Tax. GST is known as Goods and Service Tax. It is an indirect tax in India. This indirect tax has just taken away all the other indirect taxes that prevailed in India. So GST, an act was passed on GST in the Parliament on 29th March 2017. 29th March 2017. The act came into effect on 1st July 2017. And GST, Goods and Service Tax, in India is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. Goods and Service Tax is an indirect tax levied on the supply of goods and services. This law has replaced many indirect tax laws that previously existed in India. GST is one indirect tax for the entire country. The tax will be levied at the final point of sale. In case of interstate sales, central state GST and state GST will be charged. Interstate sales will be chargeable to integrated GST. The destination base is also very important. Consider goods manufactured in Tamil Nadu and are sold to the final consumer in Karnataka. Since goods and service tax is levied at the point of consumption, in this case Karnataka, so the entire tax revenue will go to Karnataka and not Tamil Nadu. The components of GST is also there. There are three types of GSTs. They are CGSTs, SGST, and IGST. CGST collected by the central government on an intra-state sale. Example, within state and union territory. SGST collected by the state government on an intra-state sale within state and union territory. IGST collected by the central government for interstate sale. Example, Maharashtra to Tamil Nadu, Tamil Nadu to Kerala, and so on. So, there are three components of GST, CGST, SGST, and IGST. CGST, SGST, and IGST. According to the nature of sales tax, VAT, and GST, sales tax was multi-point tax with a cascading effect, whereas VAT was multi-point tax without cascading effect. But GST is one-point tax without cascading effect. That's what we have to remember. GST is one-point tax without cascading effect. There are advantages of GST too. It mainly removes the cascading effect on the sale of goods and services. So the main advantage of GST is it removes the cascading effect on the sales of goods and services. Removal of cascading effect will directly impact the cost of goods since tax on tax is eliminated in this regime. The cost of goods decreases automatically. So, tax on tax is eliminated in this regime and the cost of goods decreases automatically. Secondly, it is mainly technological driven. Technologically driven. So, all activities like registration, return filing, application for refund, and response to notice need to be done online on the GST portal. So remember, technologically driven GST. So all activities like registration, return filing, application for refund, and response to notice need to be done online on the GST portal. This will speed up the processes. So GST is, remember, it is one indirect tax for the entire country. Let us continue learning public debt and other important units in the next class.